Hey, welcome back to the channel. My name's Phil and this is Grow Your Dough. 3 months ago, I set about building 3 factor-based investing portfolios for time-poor individuals. And the 3 different portfolios were based on the Freetrade Basic account, the Freetrade Plus account, and an AJ Bell account. The Freetrade Basic account was funded with £1,000, the Freetrade Plus with £10,000, and the AJ Bell with £20,000. I also built 3 comparison portfolios on the same date using a randomized function in Excel to mimic a monkey throwing a dart at the copy of the Financial Times. We can review all 6 of these portfolios now to see how they performed over the last 3 months and to see whether the monkey is a more effective investor than me. So let's crack on with it. Okay, so here we are, and I'm going to start us off with the monkey portfolios first to see the performance of the monkey portfolios. And remember, these were randomized portfolios built selecting 20 stocks from the stock market, and this particular portfolio is for the Freetrade platform. The Freetrade platform, the basic account, only has a limited amount of stocks available. So when the monkey threw the dart at the Financial Times, I had to sift through and pull out the stocks that were applicable for this account. This account was funded with £1,000, and all of the purchases of the 20 stocks took place on April the 12th. And here we are on July the 12th, 3 months later. It was funded with £1,000 and it's only worth £1,004. And you can see that, £1,000 divided by 20 stocks is about 50 quid each, or 5%. There would have been a starting position. And you can see one's grown to 6.2, but worryingly, this stock here is really small, and we can take a little bit more. So something's taken a bit of a nosedive in this sector. So we can have a little look at that now. So over the 3 months, this portfolio starting value is a little bit confusing in this spreadsheet because it only takes account of the value of the stocks when purchased, but obviously there was costs associated. So the total value of this portfolio at the beginning was £1,000. We've received £8 in dividends from holding stocks, and actually we've sort of made a loss on the stocks we've held, because despite receiving £8 in dividends, we've only made a gain of £7. Okay. So this is a sort of a chart of the different sectors. We were invested in basic materials, consumer cyclicals, financials, industrials, energy, technology, and healthcare. Quite a good split. But for some reason, healthcare has taken a massive hit. I know what that is, and we'll talk about it a little bit further on, but I can show you what's going on with that. So these are the 20 stocks that are held, ordered by their return. So IPX has grown 18.74%. And you can see all the way down, right down to Avacta, which has slumped and lost 52% of its value. Avacta was got heavily inflated as a result of the coronavirus outbreak and the medications or vaccines, or I can't remember if it was tests or vaccines that it was involved in. And since the vaccines come out, then the price has really, really slumped. And even Microgen is down 20% too. So as you can see, there's 13 winners, 7 losers. That's a 65% hit rate. When we win, we tend to win on average £3.98, which is about a 7 or an 8% gain. But when we lose about £6.80, and that's a 13.5% loss, which means, we want a win ratio of over 2 probably, and we've got one that is sort of negative, or one is sort of breaking even in terms of the average win-loss ratio, but we've got one of 0.6, which is not good. So let's look at the Freetrade Plus account now. So again, this started out with £10,000 invested on April the 12th, and now has a value of £10,488. You can see again that these stocks would have all been 5% at the beginning, but again, worryingly, this stock, probably Avacta again, has, really halved probably. So let's go down and take a little bit more of a look. And yet again, yeah, so there's been positive gains in basic materials, consumer cyclicals, financials, industrials, energy and technology, but healthcare has taken a battering, and it's probably because of Avacta. So again, it's sort of saying that the return is 5.5%. But that doesn't take into account the fact of the costs of setting up the portfolio and the transaction costs. So that really, I would say the portfolio starting value is 10,000, although it's saying it's 9968. We'll look at figures later on which include costs. So again, looking at a breakdown of the stocks, we've had a really huge performer here, 76% from ITX. That's fantastic. And Sosandar, I think that Sosandar has gone up 30%, but again, Avacta has dragged the performance down. We've had 15 winners, 5 losers, hit rate of 75% in terms of picking winners. When we win, we tend to win about £65, which is about 13%. But when we lose about £78.50, which is a 15.7% loss. Again, that's underneath that 2-figure, so that's not ideal, really. And what you notice if you compare, I know it's the same stock, so it's a bit misleading, but a feature I want to point out is big losers in the monkey portfolios. I know it is the same stock, so that doesn't feel quite fair, but over time, as we rebalance these portfolios, hopefully you'll start to see a pattern that might emerge. So here's the AJ Bell monkey account. Again, randomized stocks, picked at random by the monkey, £20,000 invested. And again, it's highly likely that this stock that is halved is Avacta. So, we'll go down and have a look at that again. So it's reporting a 4.4% gain, although I think it will be less than that because the portfolio starting value should really be £20,000. And again, most of the sectors have performed reasonably well, modest gains. Industrials is negative, but again, healthcare is dragging this down, probably because of Avacta. But let's just double check. Yeah. So again, you can see Avacta down 52%, ITX up 68%. 12 winners, 8 losers, 60% win rate. Average win of £144. Remember, this is a portfolio of £20,000 investment, which is about 14.5%, and an average loss of 124, which is 12.4%. We want this average win to be a lot higher than this average loss. So again, I've highlighted that in amber because although it's better, it's only marginally better. Okay. So let's go and look at the StockRank portfolios now. So this is the Freetrade basic account, again funded with £1,000, and after 3 months it's worth £1,070. Let's go down and look at the details. So all of the sectors have grown apart from financials, which has a modest loss of -1%. And if we look at the performance, suddenly there's much more of a consistency of solid returns. And what I really want you to notice is within this portfolio, there's no big losers. Okay, so there's 10%, with smaller stocks and volatile markets, you're going to need to give the stocks some breathing space. But, we want these values to be as low as possible for the stocks that lose. So we've got 12 winners, 8 losers, average win rate of 60%. When we win, we tend to win £7, which works out about 14%. And when we lose, we only lose £1.66, which is about 3.3%. And this win ratio is up over 4 now. So this is the type of thing that we want to see. We don't mind having some losers. We just do not want the big losses that drag the portfolio performance down. Let's look at the Freetrade Plus. So again, starts out with £10,000, is now worth £10,896 as of the 12th of July. If we scroll down, received £81 in dividends and gains of about £897. Every category positive, and minimum of 5% across this sector. So this is looking good. If we look at the performance of the stocks, you can see that we've got a big winner, Gattaca, 52.5%. And again, reasonably modest losses in our biggest losers, 12%. That's not too bad. And again, a strong, bulk of winners. 13 winners, 7 losers. Average hit rate of winners is 65% when we win. Remember, this is a £10,000 portfolio. When we win, we tend to win about £79, and when we lose, we tend to lose about £19. That's an average of 15.8% when we win. That's the average gain we get, and the average loss is 3.8%. Again, a win ratio over 4. This is what we're looking for. This is why we're farmers. We know that if we invest in a basket of stocks exhibiting these profiles, not all of them will win, but they should outperform. Let's look at the AJ Bell account now. So again, this is a StockRank portfolio built on the AJ Bell platform, funded with £20,000, and after 3 months, it's worth £21,800. Let's scroll down and take a look at the sectors. So this was only invested in 4 sectors, and all of them are positive with reasonable gains, considering it's only been 3 months. Let's look at the performance of the stocks. Again, Gattaca is a strong result. STCM, I can't remember, I think that's Step Cement or something like that, a cement company. We've got a big loser in here though. Look at that, 37%. This is what we're trying to avoid. One thing that seems to be a feature of StockRank portfolios is not that they particularly generate much better positive returns, but they seem to avoid big negative losses. Okay, so this is a bit unusual, or I would say is more the exception than the rule to a StockRank portfolio to have a 37% loss. But again, the bulk of the portfolio is performing well. We've got 14 winners, 6 losers, average hit rate of 70%. When we win about £175, 17.5%. When we lose about £108, and that's not great, 1.6. I'm going to put that in amber. I want that to be higher, but again, we've been a bit unfortunate with OPG. It just hasn't performed. So let's have a look at the ranks compared then. So what I've done is built a comparison spreadsheet that takes the Freetrade portfolios, the StockRank and the Monkey, the Freetrade Plus, StockRank and the Monkey, the AJ Bell, StockRank and the Monkey, and also compares the S&P 500 and the FTSE 100 over the same periods. So if you just go straight just to the 12th of June, the cumulative gain in the StockRank portfolio on the Freetrade platform is 7%. Whereas the comparison Monkey portfolio is up 0.4%. So that's a 6.5% outperformance over 3 months. If we look at the Freetrade Plus account, it's up as close as possible to 9%. The comparison portfolio is up about 4.88%. So that's about a 4% outperformance. The AJ Bell account is up about 9% as of the 12th. And the comparison portfolio is up 3.68%. That's over 5% outperformance. And if we compare that against the cumulative gain of the S&P 500, it's gained about 5.5% over the 3 months, and the FTSE 100 has gained about 3%. And each of the various months, there's different performances. And what I've done is I've put a cumulative chart into here. So the StockRank portfolios are the solid lines. The Monkey portfolios are the dashed lines. And the S&P 500 and the FTSE 100 are the dotted lines. So you can start to see now that the 3 StockRank portfolios, 1, 2, 3, are outperforming. They're starting to put some distance. Here's the lowest StockRank portfolio. That's the Freetrade Basic, 7%. And the highest Monkey is the Freetrade Plus at 4.88%. And I think over time you'll see a divergence between the solid lines and the dashed lines. That's what I'm hoping to show anyway. So there we are, a promising start. All of the StockRank portfolios are outperforming both their relative monkey portfolios and the underlying S&P 500 and the FTSE 100. So it's a good start. I'm hoping over time you'll see divergence in those portfolios to strengthen the case for stock ranks. So what's been your performance over the last 3 months? Are you using a stock rank approach like I've suggested below, or are you using a different approach? Are you an active investor, a passive investor? Does this approach appeal to you? And is there something you don't understand? If that's the case, then please leave a comment below and I'll do my best to answer the question. So what happens next? Of the 6 portfolios I've created, the 3 stock rank and the 3 monkey portfolios, I'll keep them as they are for a year to see how they perform if you hold on to those stocks for a year. I'll also fork the 6 portfolios to create another 6 portfolios, and I'll rebalance them at this quarterly point, refreshing the portfolios with new high stock rank stocks, throwing out ones that have become stale and replacing them, and I'll also refresh the monkey portfolio too. And then we can track how quarterly rebalancing performs against holding the stocks annually. Stay tuned soon for the rebalancing video. I've been working hard trying to produce resources that will help you go through the rebalancing process as easily as possible. To be honest, I got a little bit tripped up during the process of rebalancing, and so that experience has helped me produce resources that should hopefully stop you having the same difficulties. So stay tuned for that. I hope to publish that video in the next couple of days. As always, if you found the video useful, please give me a like, consider subscribing. I look forward to seeing you in the next video. Take care, bye.